Welcome to The Explainer. So today we're digging into the latest earnings report from a medical device company called EDAP. And what's so interesting here is that on the surface, the numbers look like a total mess, a real contradiction. But if you look a little closer, they actually tell a pretty fascinating story about a company that's betting its entire future on one single, powerful technology.
All right, so let's jump right in. When EDAP dropped its latest report on March 25th, it was a genuine head-scratcher. You've got these two key numbers that seem to be telling completely opposite stories about how the company's doing.
So on the one hand, you see their total revenue for the quarter was actually down 7% from last year. And, that's not exactly what you want to see. But then on the other hand, the revenue from their main business, this technology called high-intensity focused ultrasound, or HIFU, was up a massive 34%.
So how on earth can both of those things be true? I mean, how can your sales be falling while your main business is absolutely crushing it? Well, to solve this puzzle, it really helps to think of EDAP like a house that's in the middle of a massive renovation. They're basically tearing down an old, outdated part of the house to build something way bigger, way better, and much more modern in its place.
So let's start with the new construction. This is that booming HIFU division we were talking about. And this technology, it lets doctors do these really precise, non-invasive procedures. And it has absolutely become the company's main growth engine.
And when I say growth engine, I mean it is firing on all cylinders. For the entire year of 2025, this core HIFU business grew by an incredible 39%. So this isn't just a one-off good quarter. We're talking about some serious, sustained momentum here.
A huge driver of that growth, it's the sale of their main machine, the Focal One system. In just the fourth quarter alone, they placed a record 15 of these systems in hospitals and clinics. That's a new record for them.
And here's what's really crucial. It's not just about selling the machines. The number of actual procedures getting done with these systems in the US shot up 28% compared to last year. This is so important because it shows that doctors aren't just buying the equipment and letting it sit in a corner, they are actively using it. And that's the key to long-term recurring revenue.
So this boom is definitely not an accident. It's really built on a solid foundation. You've got these super strong sales. Get this, 14 of those 15 new systems were bought outright with cash. Then you have huge names, top-tier places like the University of Pennsylvania and the Cleveland Clinic getting on board. Even the economics of it all are getting better, with government reimbursement rates for the procedure going up. And as if that wasn't enough, they just got FDA clearance for their next-gen system, which brings some really cool AI-assisted imaging into the mix.
Okay, so we've seen the impressive new construction. That's the exciting part. But that only solves half of our puzzle, right? So now let's go back to that home renovation analogy and look at the part of the house that's being torn down.
In this chart, it really lays it all out. That fast-growing HIFU business, the new construction, now makes up a dominant 62% of the company's total revenue. But you see, there's still this pretty significant 38% chunk that comes from their older legacy businesses, things like lithotripsy equipment and distributing other companies' products.
And here is it. This is the other side of the coin. Revenue from this old part of the house fell off a cliff, dropping 38% in the fourth quarter. This is the big drop that dragged the company's total revenue number down into negative territory, and it completely masked that incredible growth we saw in their core business.
And check this out. This quote from the CFO perfectly illustrates their plan. He basically said, this isn't a surprise or some kind of failure. Nope, it is a deliberate, strategic choice. They're intentionally shifting their time, money, and resources away from those declining, lower-margin old products to focus everything, and I mean everything, on their high-growth, high-tech future in HIFU.
But, as anyone who's ever done a home renovation knows, this kind of strategic overhaul isn't cheap. It costs money. And that brings us to the company's bottom line, their profitability.
So, despite that booming core business, the company's operating loss actually got bigger in the fourth quarter. It widened from about 3.7 million euros last year to almost 5.2 million euros this year. So the big question is, where's all the money going?
Well, the bigger loss really comes down to a few key things. First, they have to pay tariffs to import their systems from France into the US. Second, as they're winding down that old business, they have to set money aside to cover inventory that's just not going to get sold. And finally, they got hit by a couple of financial items like a non-cash charge and some unfriendly currency exchange rates. It's really all the messy, expensive stuff that comes with doing a major business renovation.
So with this huge pivot in full swing and the foundation for the new business pretty much laid, What does the company see coming up on the horizon for 2026? What's the plan?
Well, they've laid out a crystal clear three-part game plan. First, just keep doing what they're doing. Execute on sales and get that Focal One system into more hospitals for treating prostate cancer. Second, expand the technology's use to treat other medical conditions, which could open up whole new markets. And third, just keep innovating to stay ahead of the competition.
And they are absolutely putting their money where their mouth is. Their official guidance for 2026 projects another year of just explosive growth for that core HIFU business. They're projecting it to grow somewhere between 34% and 45%. And meanwhile, yeah, they expect that old, non-core business to continue its managed decline.
So this leaves us with a final, really interesting question. EDAP is tearing down the old house to build a new one, focused entirely on a single, really powerful technology. The numbers show that new construction is booming, no doubt about it. But the question for the future is whether this bold, all-in strategy is a masterstroke and focus that's going to create a much stronger company, or if it's a high-stakes bet that leaves very little room for error.